All right, so today we are diving into the world of impact investing. We're going to be dissecting the 2024 GIIN State of the Market Report. Think of it as, kind of like taking the pulse of the impact investing world. And we know you like to get the big picture fast, but you also love those aha moments, so buckle up.
Yeah, what's so fascinating is that impact investing is no longer a niche market. This report analyzes 305 organizations that each manage over $10 million in impact assets. And are you ready for this? It's a combined $490 billion.
$490 billion. That's mind-blowing, but I'm guessing it's not exactly spread evenly across the board, is it?
You're right. The top five investors actually control a massive 40%. So this concentration, it really raises some interesting questions about access for smaller investors. And you know how we can help them scale their impact.
Yeah, it's almost like we need impact investing to also impact itself and kind of level that playing field. But let's talk about where this money is actually going geographically. I will say some of these numbers in this report really surprise me.
Yeah. It's a real tale of two worlds. The U.S. and Canada, they're still dominant. They're pulling in almost half of all impact investments. But here's the really intriguing part. We're seeing really significant growth in emerging markets, especially sub-Saharan Africa.
Yeah, it seems like investors are really starting to recognize the potential, not just for returns, but also for impact in those markets. And speaking of eye-opening growth, I was actually floored by the numbers for Oceania.
Oceania, yeah, so that includes Australia and the Pacific Islands. They saw a staggering 62% growth in the last 5 years. That kind of explosive growth, it makes you wonder what's driving it. Is this like a new frontier for impact investing? It's definitely something to keep an eye on for sure.
Definitely not a region to underestimate. Let's shift gears a little bit and talk about the sectors that are attracting all this impact money. I know our listeners are all about understanding the what as well as the where.
Absolutely. So energy is the clear leader, followed by housing and financial services. But you know what I found particularly interesting is the rise of information technology. It seems that impact is really starting to weave itself into the digital world, which opens up this whole new avenue for change.
It's true. Impact investing is becoming more and more intertwined with our everyday lives. But on that note, I did notice that water sanitation and hygiene, well, they're fundamental. They receive a comparatively small amount of investment.
Yeah, it's a bit of a head scratcher, isn't it? I mean, this is a sector that's so crucial for human well-being, yet it really seems to struggle to attract the big bucks. It highlights how investment decisions aren't always aligned with the issues that most desperately need solutions.
It's a sobering thought for sure. Now, we can't talk about impact investing without addressing the elephant in the room, climate change. So how are investors actually translating all this talk about climate action into actual investments?
Yeah, investors are definitely putting their money where their mouth is, with increasing investments in both climate mitigation and adaptation. However, the report does reveal a concerning trend. A lot of these investments aren't yet meeting those crucial science-based targets.
So the good intentions are there, but maybe the execution needs a little work, or the way that we're actually measuring impact. It's not just about throwing money at a problem, right? It's about making sure that that money is actually making a tangible difference.
Exactly. And that's where I think this report provides some really valuable insights into how investors are approaching impact measurement and deal structuring. It's about being strategic, measurable, and truly accountable for the impact that's being created.
Yeah. So we've established that impact investing is booming. This capital's flowing into a really wide array of areas. But let's kind of peel back the layers here and delve into how investors are actually structuring these deals. Are we talking traditional investment strategies, or are they getting a little more creative?
So private equity is still king, but there's this new kid on the block. Equity-like debt. It's still relatively small, but it's growing at this astounding rate of over 100% annually.
Equity-like debt. That's not a term you hear every day. It seems like impact investing is really pushing the boundaries of traditional finance, coming up with these really innovative ways to attract capital.
Absolutely. I think this creativity is essential if we really want to unlock these new funding streams and direct them towards impactful initiatives. It's just refreshing to see this kind of innovation, especially in an industry that can sometimes be slow to adapt.
Impact investing, disrupting the financial world, one innovative deal structure at a time.
Okay.
But jokes aside, one thing that really stood out to me in this report was this real emphasis on impact measurement. It seems like gone are the days of just simply checking the impact box. Investors are getting serious about actually measuring the real-world effects of their investments.
Yeah, you hit the nail on the head. I think we're seeing a real shift, moving beyond just good intentions towards, standardized metrics, integrating impact goals directly into the legal contracts, and even linking employee bonuses to tangible impact results. It's no longer just about talking the talk, it's about walking the walk.
Now, that's what I call putting your money where your mouth is.
Ah.
But the report also kind of hints at some of the challenges in this area, right? I mean, measuring impact accurately and consistently across all these different sectors and geographies, that can't be easy.
You're right, it's a complex endeavor. I think one of the biggest challenges is this fragmentation. There's still a lot of variation in how impact is actually being measured, which makes it really difficult to compare different investments and really determine, what's truly effective.
Yeah, it's like trying to compare apples and oranges. Until there's a more standardized way to measure impact, it's going to be tough to really track progress and share best practices across the industry.
Precisely. And this lack of standardization poses a real challenge for attracting new investors. Because without this common language for impact, it's difficult to build trust and demonstrate value.
It's like trying to bake a cake when everyone's using a different measuring cup. Total chaos in the kitchen. But speaking of challenges, let's move on to some of the broader issues that are keeping impact investors up at night. I mean, the world feels a bit like a roller coaster these days. I can only imagine that adds another layer of complexity to impact investing.
Yeah, you're spot on. We are facing this perfect storm of global challenges: inflation, rising interest rates, the ever present threat of climate change, this level of complexity and uncertainty. It's uncharted territory, even for seasoned investors.
Yeah, navigating those choppy waters, while also trying to balance financial returns with this positive impact. It sounds like a monumental task. The report does dig into some of the specific concerns of different types of investors, and I found the contrasting viewpoints of small versus large investors particularly fascinating.
Yeah, it's intriguing, right? Smaller investors are feeling the pressure of regulations more acutely. Often they lack the resources and infrastructure to really navigate this constantly evolving regulatory landscape of impact investing. Whereas larger investors, on the other hand, they're more concerned about the implications of things like artificial intelligence for their portfolios, different scales, different concerns.
One investor's regulatory headache is another one's AI conundrum. It just goes to show that even within the world of impact investing, there's no one-size-fits-all approach to navigating the challenges and opportunities that lie ahead.
Absolutely. And the report really highlights this diverse range of factors influencing investor decisions. But there's one more disconnect that I think you'll find particularly interesting, and it involves blended finance.
Blended finance, it's like the buzzword we hear everywhere these days. But the report kind of suggests that there might be a little bit of a gap between how it's perceived and how it's actually being used in practice.
Yeah, you're absolutely right. While blended finance is often presented as this way to de-risk impact investments, in reality, it's frequently used to bridge funding gaps for newer and potentially riskier ventures.
So it's not so much about reducing risk as it is about attracting capital to areas that might otherwise be overlooked.
Precisely. Investors, they're drawn to this idea of blended finance as a way to kind of mitigate risk. But the reality is it's often deployed in situations where risk is actually higher, which isn't necessarily a bad thing, but it does highlight the need for greater transparency and a really clear understanding of the risks and rewards involved.
Yeah, it seems like transparency is kind of a recurring theme in impact investing.
Right.
Whether we're talking about measuring impact or structuring these deals, it's really about being upfront about intentions, methodologies, and potential risks.
Absolutely. Transparency builds trust. It builds credibility, which are both essential for attracting and retaining those investors.
Now let's kind of shift gears a little bit and dive into impact measurement. I know we've touched on it throughout our conversation, but I'm curious about the specific approaches that investors are using to not only select impact metrics, but also hold themselves accountable.
So the report actually reveals a variety of approaches. The most common one used by 70% of investors relies on these kind of established impact metrics and tools. Things like the Global Reporting Initiative, the Impact Management Project's harmonized standards for outcomes, and the Impact Reporting and Investment Standards, GRI, HEPISO, and IRIS Plus for short.
So it seems like impact investing is really developing its own set of standardized tools and frameworks. That's going to make it easier to track progress and compare investments, right?
It's definitely a step towards greater standardization. But it's not just about the tools themselves, it's about how they're actually being used. Another common approach cited by 64% of investors is to actually align their metrics with academic research and evidence. That supports their theory of change. So they're essentially grounding their measurement strategies in solid research and a clear understanding of how their investments are supposed to actually create impact.
So it's not just about measuring something, it's about measuring the right thing. I'm sensing a theme here. Impact investing is all about being intentional.
Absolutely. It's about being deliberate and thoughtful at every stage, from selecting those metrics to actually holding yourself accountable for the outcomes. And speaking of accountability, the report highlights some really interesting trends in how investors are actually integrating impact into their agreements and motivating both their staff and their investees to achieve those impact goals.
Yeah, this is where the rubber meets the road. I mean, it's one thing to talk about impact, but it's another to actually embed it into the very structure of the investments and operations. So how are investors actually going beyond just words and putting real teeth behind their impact commitments?
Well, they're getting creative. The most common approach, which is adopted by 62% of investors, is to incorporate specific impact goals directly into the legal documents, like the investment agreements and term sheets. So these aren't just handshake agreements, these are legally binding commitments.
Wow, that's a powerful way to demonstrate commitment. But it's not just about legal contracts, is it? What other strategies are investors using to kind of create this culture of impact within their own organizations and the companies that they invest in?
So we're seeing investors implement a range of mechanisms to really incentivize impact. For instance, 35% are now incorporating impact achievement into employee performance reviews, and 13% are actually linking a portion of their staff's compensation directly to the achievement of impact goals.
Okay, so they're really walking the walk. It shows that they're not just expecting others to prioritize impact, they're making it a core part of their own internal culture and reward systems.
Mhm.
But what about the companies they're investing in? How do they ensure that those companies are equally committed to impact?
That's a great question. And the report actually highlights a really interesting dual approach here. So while 65% of investors believe that their investees are intrinsically motivated by impact, they're also implementing these more formal mechanisms to really ensure accountability.
So it's about finding that balance, right,
Mhm.
between trusting in the good intentions of the companies they invest in, but also establishing clear expectations and accountability measures. What do those measures actually look like in practice?
Well, we see a variety of approaches. For example, 26% of investors are requiring these baseline impact targets to be met
Hmm.
before they actually release an initial investment, and 23% are linking the achievement of impact results to favorable investment terms, like a reduced cost of capital.
Okay, so it's kind of a combination of carrots and sticks, rewarding that positive impact, but also creating consequences for falling short. But let's be honest, measuring impact accurately and consistently, that is a complex undertaking. What are some of the challenges that investors are facing in this area?
You're right, it's not without its hurdles. The report reveals that 41% of investors are really struggling to measure impact in a standardized way across their entire portfolio, which makes it incredibly challenging to compare performance and identify best practices.
There's that fragmentation issue again. It seems like finding a truly standardized approach to impact measurement is still a significant challenge for the industry. But despite these challenges, I am sensing this kind of trend. That impact measurement is becoming increasingly sophisticated and rigorous. It's no longer just a box to be ticked. It's this really integral part of the investment process.
Absolutely. And one of the most notable trends in this realm is the rise of impact audits and third-party verification.
Ah, it's like the old saying, trust but verify. It's not enough to just measure impact. You need to have someone else double-check your work to really ensure that accuracy and transparency.
Exactly. Transparency and accountability are really paramount in impact investing. And the report indicates that 40% of investors are already engaging third-party specialists to audit their impact management processes, while 32% are relying on these internal audits or validation, so this trend towards external verification. It really speaks volumes about the growing emphasis on credibility and rigor in impact measurement.
It seems like impact investing is really raising the bar for the entire investment industry,
Yeah.
pushing for greater transparency, greater accountability. Now, before we wrap up, we have to address the elephant in the room, or perhaps we should say the algorithm in the room. Artificial intelligence, it's everywhere these days.
Mhm.
And the impact investing world is no exception. So what does the report tell us about how AI is actually being used in this space?
Yeah, AI is definitely on the radar of impact investors, but the adoption is still in its early stages. We're kind of seeing a mixed bag of approaches. While 18% of investors are already using AI tools for impact measurement and management, a surprising 47% have no plans to integrate AI in the coming year.
Yeah, that's a significant divide. It seems like some investors are really eager to embrace the potential of AI, while others are taking more of a cautious wait-and-see approach. What's driving this disparity, and what does it mean for the future of AI in impact investing?
Well, it's understandable that investors are kind of approaching AI with this mix of excitement and caution. I mean, it is a powerful technology. It has the potential to really revolutionize how we measure, manage, and even define impact. However, it also comes with its own set of challenges and ethical considerations.
Yeah, it sounds like we're still in the early days of figuring out how to harness the power of AI for good. What are some of the ethical considerations that investors are grappling with as they kind of explore the use of AI in impact investing?
One of the key concerns is bias. AI algorithms are only as good as the data they're trained on. And if that data reflects existing biases, those biases can be amplified and perpetuated by these AI systems. This is a significant concern in impact investing, where the goal is to create a more equitable and just world.
So it's not just about using AI to measure impact. It's about ensuring that the AI itself is actually aligned with the values and principles of impact investing.
Precisely. We need to ensure that AI tools are developed and deployed in a responsible and ethical manner, with safeguards in place to mitigate bias and promote fairness.
It seems like the use of AI in impact investing, it's as much about ethics as it is about efficiency.
Absolutely. As with any powerful tool, we need to be mindful of the potential consequences and really use AI responsibly to ensure that it's a force for good in the world.
It sounds like the future of impact investing will be shaped not just by financial returns and impact metrics, but also by how we navigate the ethical complexities of these emerging technologies like AI.
You hit the nail on the head. As impact investing continues to evolve, it'll be fascinating to see how investors strike that balance between leveraging the power of technology and upholding the ethical principles that are really at the heart of this movement.
This report really does paint a vivid picture of where impact investing stands today. But the real question is, where does it go from here? Which of these trends will accelerate, which will kind of fizzle out, and what completely new developments might reshape the landscape?
Yeah, that's the million-dollar question, isn't it? I mean, if we had a crystal ball, we wouldn't be here.
Uh,
But I think based on the trends that we've discussed, there are a few key areas that deserve really close attention moving forward.
all right, so give our listeners a little glimpse into the future of impact investing. What should they be watching out for?
Well, first, I think the role of technology and especially AI is poised to be absolutely transformative.
Yeah.
Whether it's being used for impact measurement, deal sourcing, portfolio management, AI has the potential to really supercharge the efficiency and effectiveness of impact investing.
So for someone who's really looking to stay ahead of the curve, understanding AI and its applications in the impact space, that's a smart move.
Absolutely. It's not about becoming an overnight expert, but even having just a basic understanding of AI and its implications for impact investing. I think that's going to become increasingly valuable.
Yeah, knowledge is power after all. So what else is on your radar?
So another key trend to watch is the evolution of blended finance models. As we see more investors embrace this approach, we're likely to see even more creative and impactful structures emerge.
So blended finance, it's not a passing fad, but its application might look quite a bit different in the years to come.
Exactly. It's no longer just about mitigating risk. It's about using blended finance to unlock these new sources of capital, tap into underserved markets, and really tackle even more of these complex global challenges.
I love it. Impact investing. It's constantly pushing the boundaries of what's possible. So any final words of wisdom for our listener before we wrap up our deep dive?
Well, I think the biggest takeaway is that the impact investing space is incredibly dynamic, and it's only going to become more complex and nuanced. The key is to stay informed, remain open to new ideas, and never be afraid to ask those tough questions.
Words to live by. Well, thank you so much for joining me on this deep dive. I hope our listener feels equipped to navigate the world of impact investing with a renewed sense of purpose and a thirst for knowledge.
It's been my pleasure. And just remember, the future of impact investing is being shaped right now, and each of us has the power to play a part in creating a more sustainable and equitable world.